What's up, my Mind Your Money business folks? It's me yet again with another video. Yeah, with a video. On today's stock market news, right? I did not post yesterday. I totally forgot. I've been busy. Although I'm in Hawaii, I'm here for work. So, yeah. And yesterday was just, it was a taxing day. It was a lot, right? So I went for like a 2-hour walk just to I went for a walk. So I didn't realize until later that I did not do a video, and now for some strange reason it looks like the internet here does not want to behave. Oh, just came up. Sorry, so what happened today? Oh, and as always, hopefully you are in the market and not trying to time the market, because that is simply impossible to do. So, it says here, Intel stock jumped on Trump's admin is considering stake. Huh, interesting. But I don't think I'm going to read that one, so please give me a minute. I don't know. The internet, hotel internet, it is what it is. So I think I want to read something else and not what I just saw about Intel. So let's see if I can get to this website. What is going on with internet? Hopefully you guys are having a good day, blessed day, wherever you are located in the world. Hawaii is like really nice. I mean, I've been here a lot. I definitely needed this little away time from work, even though I'm here for work. But I'm taking a week off and I'm staying in Hawaii for another week. And I was just talking in hopes the website that I clicked on would come up, and it just did. So let's get into it. It says the S&P 500 X out a third day of gains as traders shake off a hot inflation report. So let's see what happened. It says stocks recover from lows reached earlier on Thursday, with investors buying the dip once again in spite of a dour wholesale inflation report. The late day gains mean the S&P 500 notched its third straight record close by the slimmest of margins, settling up 0.03%. The Nasdaq Composite and the Dow Jones Industrial Average were marginally lower, with the tech-heavy Nasdaq ending the day down 0.01%, and the Dow losing 0.02%. So the S&P 500 and the Nasdaq were both down 0.4% at their lows before bouncing back, which is a great thing, because I lost a few dollars, not a lot today. The Dow shed more than 200 points at one point. The major averages were hurt by July's producer price index reading, which suggested that a Federal Reserve rate cut is far from guaranteed. Those rates need to come down, but they're not guaranteed. So wholesale prices rose 0.9% on the month, much more than the 0.2% economists polled by Dow Jones were expecting. The index had come in flat in June. Wholesale prices can be a leading indicator for consumer prices. To be sure, some traders look past the PPI number because the report showed the increase was driven by a large gain in portfolio management. Large investors, along with airfare. Without those factors, the figures would have been much closer to estimates. Okay, so despite the higher inflation number, Fed funds futures were pricing in about 93% odds of a rate cut in September, only slightly lower from the day prior, according to CME Watch Tool. The futures, however, did remove any chance of a half-point cut. So it seems to be reasonably clear at this point that this wasn't enough to get the Fed off of another cut or get it going on a cutting cycle, said Scott Ladner, Chief Investment Officer of Horizon Investments. The professional said it, not me. So I think people are just like, yeah, this was not a great PPI print. Certainly not what you want to see. But we're going to want to see a couple of them before we really think that we're getting sort of a reaccelerating inflation environment, which is really the thing that can knock the Fed off course. So that is something to pay attention to, right? Yeah, I mean, because when interest rates are lower, we can borrow. We as consumers and businesses can borrow money at a lower rate, which is good for us. Like who wants to buy a house at 11% interest rate? I think the interest rate currently is like at a 6%. If it was lower, great, because the prices of these homes, real estate and everything, even the stocks are going up. So you get less for more money. And of course you want more for your money. But that's just the nature of the beast. But either way, it says investors came into the session riding high, with the S&P 500 and NASDAQ posting fresh record highs in the previous session. The benchmarks got a jolt earlier this week after the release of a cooler than expected consumer price inflation report for July. Yeah, and so that's about it, people. That is it. That is pretty much it for the stock market news. So let's see what some stocks did today, shall we? So please bear with me for a minute. After this, I'm going for a walk, and then what is the problem with this? Bear with me. Bear with me. I don't get it. I don't know what's wrong. It's like I'm connected to the internet. I'm at the Hilton Hotel in Honolulu, Hawaii, and the internet, for some strange reason, does not want to behave. I may not be able to go over any of the losses of gains of certain stocks like I normally do. So I'm just going to end the video here, just stop here. It is what it is. Hopefully you guys are investing, okay, as soon as I said that, then the freaking thing comes up. NVIDIA. What did NVIDIA do today? I guess maybe this is trying to teach me patience. Maybe that's what's happening. Too bad I didn't log on before I started recording this video, but I wanted to make sure that I do it since it was not done on yesterday. So things are just going slower. So I'm just going to say this. Before you can invest, for majority of the people, they need to get out of debt. And the only way that you can get out of debt is by creating a plan. And that plan is called a budget. And a lot of people, especially those of us that live in America, we have a huge amount of debt. And because of that debt, it's keeping us from investing. It keeps us from investing in ourselves. It keeps us from investing into paper assets that are located in the stock market. It keeps us from investing into real estate. It keeps us from investing into anything that can make our lives easier or better, which sucks. Because when your money is invested into things like real estate, or like, especially if it's profitable real estate, or investing into the stock market, that is where your money is working for you. Or say you have a successful business and that's generating you income, with you being there or not being there. let's say Jeff Bezos, he created Amazon. Now Amazon is like creating money all over the place. So does Microsoft. So does Apple. So does Microsoft. So the creators of those platforms don't even have to work there. It's generating money for that individual. The same with having stocks. Your money is making money, right? And you don't have to do anything but invest. But in order to invest, you need money. You need capital. And if you have a lot of debt, you don't have any funds or any money that you're working hard for on a daily basis to invest. So you need to get out of debt. And you get out of debt by creating a budget. So you can start telling your money where to go. You need to start attacking that debt with a vengeance, because debt is not your friend. Debt's a problem. So get rid of all these problems. It may take a while, but create a plan, remain disciplined, stick with it, and attack it. Slow and steady wins the race. You don't stress yourself too much. However, you may need to get a better job, or you may have to get a second job for a limited amount of time. Start telling your money where to go throughout that budget. You stop all investments. If you are investing into your job's 401k plan, stop, so you can have all of your money going towards that debt. List them from smallest to largest. I don't care what the interest rate is. Some people do. I don't, because as you pay off these small debts and these things that you owe money to, you start to feel like you're accomplishing something. Like, pay off that $1,000 Home Depot bill and get rid of it, that credit card, and then cut up and move on. Move on to that $3,000 bill, that $5,000 bill. Continue to pay minimum payments on all bills, but you start throwing more cash towards the smaller bill, and you keep moving up. And actually, Dave Ramsey calls that the snowball, the debt snowball. You just keep rolling that snowball down the mountain. It gets bigger and bigger and bigger, because you start freeing up cash as you pay off these smaller items. Then you have more money that you can throw towards the bigger debt. And that snowball gets bigger and bigger and bigger. And then when you're done with that student loan debt, when you're done with that personal loan debt, that credit card debt, that car loan debt, now you have all of this money that is yours, maybe except for the mortgage. The mortgage is not something that is looked upon as a debt. But now you paid off all the debt, those 4 things that I just named. Then you create 3 to 6 months of living expenses for your emergency. That's called an emergency fund, because life happens. Emergencies in life happen. That tire goes out on your car. It may cost you $300-400. That leak in your roof. The hot water heater in your home. Things. A visit to the hospital. You have the cash in your emergency fund, or your HSA if it's medical. You pay it off, right, with your emergency fund. Then you create your 3 to 6 month living expenses for your emergency fund. After you've erased all your debt, you start investing 15% of your income into your retirement. You fund your kids' college fund, that 529 plan, if you have kids. Now you only have your mortgage. Now you can start tackling that mortgage if you have one. If you don't have one and you're renting, that's okay too. But if you want a home, you save up 20% as a down payment on that $400,000 home, which is $80,000, which may take you another year or two. This depends on your income and what it is that you want. You save up that $80,000, you put it down on that $400,000 home, because $400,000 times 20% is $80,000. You put that $80,000 down on that $400,000 home, you finance that $320,000 for 15 years, not 30 years. You have all this cash. You can afford it. Also, you make sure that that mortgage, or if you're paying rent, is no more than 25% of your take-home pay. Mine is less than, I pay rent because I have rental properties. I pay rent, and my rent is currently about 15% of my take-home pay. 15 or 17%. Either way. Your mortgage or your rent should be no more than 25% of your take-home pay. You pay off that mortgage. If you buy that home, you should have the income to pay off that $320,000. Finance it for 15 years, and you more than likely, because you have no bills, you have all this cash, you more than likely pay that home off in 3, 5 to 7 years. It just depends upon how aggressive you are. And you don't have to be that aggressive. You know, take your vacation, live a little, you know, pay extra towards your mortgage, because that's the only thing that you have to pay for. Your kids' college fund is fully funded. You're investing 15% of your income into your retirement. You have your 3 to 6 months of living expenses. You just have your mortgage. Then when your mortgage is paid off, you can do whatever you want to do. You can go on more vacation. You can invest more than 15%, which I highly suggest. Invest more than 15% of your income into retirement. I was investing like 40 of, was it 40? Yeah, like 40% into my side investment account. Either way, you can invest more money or you can give more money away. You have that option. You have that freedom to do so. And that is what I have to remind myself of, and that's what I want you to remind yourself of. The options that you're giving yourself by having control over your life, especially when you have control over it financially. Yeah, this internet just does not want to behave. Oh. And as soon as I said that, it came up. But either way, I'm going to end this video because, well, I can't say this. This sucks. Nvidia did gain 48 cents today, closing out at $182.02. My information technology ETF, FTEC, lost 80 cents today, closing out at $209.59. Palantir lost $3.35 today, closing out at $181.02. Tesla lost $3.65 today, closing out at $335.58. Broadcom gained $2.14 today, closing out at 69 cents. And that is all I can see. I'm going to end this video here because I have to go for my walk before the sun sets. All right, so you guys take care. Have a blessed day. Peace.